Hello, everybody. It's the 2nd of Feb. So it's a Monday. We just opened. Let me just grab this arrow. So I'm on ES, and this is a 30 minutes. So we've literally just opened. So yeah, if this is the first video you're seeing, these boxes are just micro sessions. They just make it easy for me to see. Um, but I can take them up for now. Just give me one sec. Actually, so the only uh, thing that I can observe right now is that during the Asia session, we've swept that this low right here. This is the previous week's low. Also, we had this low here that was preventing prices from going down. We talked about this, I think, Friday's video, and then we also have prices here that was preventing prices from going up. So we're still inside this maze, I guess. The question is, do we just sweep uh, the pre-New York session and then go back down? That's possible. In any case, we would just follow the process. So I'm using the two-step model, which is my model. So step one, we need direction. So we're going to wait 30, 45 minutes or so, and just wait for price to give us that direction. So I'm gonna go down to the 5 minutes. I also track on the 1 minute, just in case price is moving really, really quickly, to see if I can see an opportunity there. But what I'm looking for first, based on my model, is directions. That's the first thing, right? So there's only three stages to it, right? Direction, fair value gap, and then FIBs. Okay, no indicators. There isn't any need for indicators because indicators introduce uh, they introduce complexity, and by doing that, it makes things unclear, right? And you guys know I'm really big on clarity, um, and your model then gives you consistency, right? So we'll wait, we'll come back 30, 40 minutes. All right, see you then. All right, it's 10, 10 o'clock. So we've done 30 minutes. So what we've done is, you can see from the open, very strong move all the way up. We've got our swing high here. We've got a swing low, which we can use here, but we also have, where's my arrow? We also have um, this entire move from this low that has been running all the way high. So just bear that in the background that this move started from this area right there. So what I'm going to do is first highlight all the 5 minute fair value gaps. I mean, this is really the main one. I mean, there's one here as well, but there's no need to highlight this one. It's quite large. So we're on the 5 minutes at the moment, and we have, we've run quite far actually. It's almost 40, 44. That's that's basically the entire range for the AM session. It's about roughly about 50. So we've run the whole range. So really, there isn't that much of an upside um, left. So I would like to see us come down a little bit beyond the 50%, and then look for. So if we if we've done step two, which is just highlight the fair value gaps, there is one here, but I think there's one here, but we're not going to use that one just because we've already run that many, points. Now I could keep running, that's fine. I'm not going to get involved. But we've run so far uh, very quickly. I need a significant pullback. Now, also, Let's go to 30 minutes. Okay, also, oh, I've got another error here. Also, this level here, I mentioned yesterday, is going to prevent prices from going higher, right? So, and it's right above us. It's right above us. So I would prefer a 50% plus retracement on a 5 minutes. Then I can measure my move, right? So only 3 steps. We've got direction. I mean, you can clearly see it's since the 9:30 anchor, it's going up. It's going up, right? The second was the fair value gaps. We just highlight them. The third is finding the overlap. That's it. We find an overlap between a fair value gap and a fib, right? Something wrong with my voice today. Just give me 1 second. Just drink some water. All right. Hopefully that water solved it. It went really croaky. Anyway, so it's 3 steps, right? No need for indicators. All I'm using for my model is just price and time, and then fibs. Okay. So I guess you can say fibs are indicators, but fibs are not really. They're not indicators. No indicators needed. You can build a model just based on those 3 things. Okay. So for me, my priority when building my model was consistency and clarity. Okay. All right. So let's go back to the 5 minutes. So I'm watching this level here, but I want my pullback. So if we go to the 5 minutes, so we've got this high that was formed. So we can use the anchor low right here because we had this sideways movement. So we can use that. If we run this and let's run this one. All right. So what I need is for price calm down. Uh, so we don't have any clean overlaps here. The only one is here at 70. We're making new highs anyway, so we just keep extending the fib until we have a retracement. So I'm not going to do anything until we have an actual retracement into a fair value gap, and that fair value gap must, I repeat, it must hold. So what I do is usually when price gets there, I will drop to a lower time frame, like the 1 minute. It can be any time frame, doesn't have to be the 1 minute. But I go to the 1 minute and I will start to look for specific things. Okay, there's a lot of things I can look for. The most common one is the rejection, but you can also have inside bars. You can have engulfing candles. There's all kinds of ways. But the one I look for the most is like a rejection plus a push and then a micro fair value gap, right? So let's come back. We'll give it time. It's only 30 minutes. We'll give it another 15 minutes. So I'm looking at price in terms of time. So 30-minute chunks or 15 minutes, which is half of the 30 minutes. So micro is 15, standard say 30. Um, and I'm just giving these random categories to be honest. 45 minutes macro, and then 1 hour extended. It can keep growing if it's going really fast, right? If it's just going in one direction, there's nothing you can do. You can't jump in. You need to wait for the retracement. So we'll let price settle. We'll give it 45 minutes. Come back. If nothing's happened, we'll give it an hour, and after that time, we'll see what happens. All right. So we'll come back in a while. Okay, 10:15. So just looking at this one, I may have missed this trade just because I'm worried about this level. So I'm on the 5 minutes, by the way. So where's my arrow right here? Let's make it. Why is it so big? Let's make it small. Okay, so this level here, I'm worried about because it's this level That's the 30 minutes. So is this level here. I'm worried about it because it can prevent prices from going higher, right? So my thinking was, um, so here's what I was looking at. Here's what I saw. Okay, so here's what we're looking at. This push, which is step one, your direction. We wait for a retracement. This is the 5 minutes. Now this is a retracement. This is a 5 minute fair value gap right here. Okay, you can see how we've tapped into it and we've gone off. So technically, that was your retracement, and therefore this move going up is your measured move. But I didn't want to take this entry, which overlaps with this 30, uh, because of that level. If we came a little lower and we then try to measure the move, if we fail to take this level, that's still fine. I can still make, still profit from that. Um, so that was my thinking. Is I wanted a little deeper of a retracement, probably this 50, and then analyze from there, and then decide from there, right? But we have got the direction. We have got this. This is a retracement. This is a retracement. So let's have a look at what it looks like on the 1 minute. I'll put that on a separate screen. Don't know if you can see this. All right, so on the 1 minute, all right, on the 1 minute, you can see how we just did a two-bar reversal, right? Two-bar reversal, bang, boom, fair value gap, gone. This is moving very fast. There is no way I would have caught this at all. No way. Uh, there is no way. Absolutely no way I would have caught this because when there's a two-bar reversal like this, what I tend to do is use the last candle. I draw a line right there, and I will wait for that. See, that break is not that break is, I don't like breaks like this. So all I'm waiting for is a close above this candle, and then the next candle or the candle after that will retrace back into it, and that will trigger my trade. It did do that actually, but I don't have the best eyesight in the world, and this is really tiny. Okay, this what was it? This open is 975.75, and this close is I mean it's 976. It's so tiny. I mean it's still valid, but I wouldn't have seen that. I wouldn't have seen that in real time. It would have taken me a while to see that. Anyway, price is moving really quickly. So I think we've missed this one for Monday. Uh, if we measure that move, so back on the 5 minutes, we measure this move, then this green line will be your termination, right? That will be your termination. Switch recording devices because the other one just crashed on me. Volume went dead. So what time is it right now? It's taking me a while to close that application and start a new one. So it's 11:40. So I was just saying let's watch what price does, but um, I want to keep this video to 10 minutes as best as I can. This level still remains a very strong level. So I'm obviously not in this trade, but if I was, I'll be out of this trade just because this is a very strong level. This is where we expected price to go. We don't always get that, right? So you hear me say good enough. So it's close or good enough, or it hits your target. In this case, it hasn't reached, and we've gone into lunch. So if we just grab this one, pretty much we're going into lunch there. And to be honest, I really want to be out of my trade before lunch because lunch itself is unpredictable. So I think we'll kind of bring the video to an end. The key point of the video really is that you just need price, time, and fibs to build your own model. You don't need indicators. I mean, you can use them, but you don't really need them because they, like I said, introduce complexity. Summarize, I did not take this trade. We did have direction. We did have a retracement, but it was a very short one. And I was very worried about this level, which so far we are really struggling to get across. We may get across it after lunch, but I mainly focus on the AM, so I will not be watching this any longer. All right, guys, that's the end of the video. I'll see you in the next video.